What's going on, everyone? Welcome back. In this one, I'm going to be sharing my live trading from today. Difficult day, really made me work for it. None of my targets were delivered, but we're absolutely fucking banking. Made about $900 across two accounts, AMP and TradeStation. I'm going to show you guys both trades here, as well as a short review at the end as to what I was looking for and why I was looking for it. Enjoy. All right, so zooming into the daily chart here, we dropped down into this daily fair value gap here. So it's nice on Tuesday. So what we look for is the agreement between time and price. We expect the low of the week to form on Tuesday. That's price, or that's time, sorry. And then the daily fair value gap is the price. So time and price agreeing, that makes the low of the week. Very consistent. It's the thing you want to note down. These are the things you should be taking notes on. Down close candle. This is a bullish order block, as Tommy had mentioned. So what I'm watching is going to be this key level here. So this is a daily bullish order block. We drop down into it, hit the opening price. That should lead to bullishness on the upside. First draw is going to be the all-time high at the 424 level. And then through that, I'm looking for the 458. Those are the targets we've had on the upside. And then beyond that, we'll have to see what we get on the intraday. Dropping down into the hourly here. These obvious equal highs here. Where do you guys think would be above that? Buy side liquidity, right? So I'm looking for something to bust through the doors on these equal highs because retail's trying to go short here, right? I see their equal highs here. Strong resistance, right? Because hit it once, hit it twice. You guys know the drill. So that's the draw. That's what we're looking for. There's still not the framework yet to go up into those highs, right? So it's one thing for me to sit down in the pre-market analysis. All right, guys, here's what we're looking for. Daily's bullish, hourly's bullish. We're looking for these things here. This is the draw, and that's lovely and great. But then what you have to do in the session is then wait for that to align, right? And so far, there's nothing to do, right? And for a lot of you guys, or some of you guys, timing is an issue, right? You can see where it's going to go, but then you're just gambling your ass off on every single fluctuation that looks like it's going to go there. And one of the things that you have to do is stay poised and know what your model is and wait and execute on that model and when it's going to form. So that you're not just like a dog chasing cars up and down all day long, taking 75 trades. All right, so after 9:30, we've seen a drop, sell side liquidity run here, also dropping into that daily order block. We're trading into this gap here now. I want to see if this can act as an inversion fair value gap and see if we can respect the upper half of it. All right, we're going to go and take a long in here. Get that fill there. All right, tight stop on this one here. Stop's just going to go below the breaker here. So inversion fair value gap supported in the upper half is what I wanted to see. And now I'm going long inside this bullish breaker here. On another account here, as soon as we get above those highs, I'm just going to go ahead and pay myself the 600 there. All right, that pays me out there on the other account as we trade above this high here. I'm going to take the 500 on the other account, and then I'm going to let this one run a little more here. One of the reasons why I'm a big advocate of partials is because on a retracement like this, right, especially when you're a developing trader, you're freaking out, right? You have no idea what to think, no idea what to do. It's anxiety inducing, you're panicking. So the best thing to do to eliminate that is just take a partial, right? At levels that make sense, right? So from here, we had an easy run to buy side, take something off there, right? So that's why when I take something off my other accounts, it makes it easy, right? So now if it comes back and runs on the stop, okay, that's fine. We got something locked in the bank. We're still going into the end of the day positive, right? So you have to manage the psychological side just as much as you do the technical side in trading. All right. Well, that takes me out here. All right, so equal lows here, taken out inside that bullish order block there, that black line. So we drop down sell side inside the bullish order block, and now we're starting to overtake this gap here. So that should act as an inversion fair value gap. And then the fact that we also have a DISI here, this now becomes a balanced price range. So let's see if we can trade into that and leave the lower half of this open. All right. So I'm going to go long here, 5 micros on the NASDAQ here. But I still do think I got a nice low of day entry here. So I'm going to let it ride here. And that's what's really been difficult with recent market conditions. There's just been a lot of this stuff here, right? Like for example, even yesterday, right? Really easy read, right? We're bullish looking for higher prices. I mean, 930 Judas, repricing higher. I mean, very easy, straightforward, textbook price delivery. But what's been more difficult is look at the actual price delivery that we're seeing, right, on the intraday time frames. Really sloppy, a lot of back and forth, really difficult to hold on to trust. And that's what we've been really seeing a lot of in the past couple of years, a lot of that type of stuff there. And that's why when people have been saying price action is more difficult, it's not that they're changing anything. It's not that anything's different. It's just how it's delivering is a lot more manipulated, a lot more sloppy, and a lot more harder to work with. So the inversion fair value gap I used for the first setup, closure above it, long, easy 30 points in the buy side. I'm using the same thing for this setup here. I want to see us get above it, find support inside it, and then keep rallying. I want to see if I can get on a couple more contracts here. Let me see what that would add on in terms of risk. All right, so I just added two there. So you can see the executions here. Just added two more in there. And then with the pyramid, touch a little bit on pyramiding. You guys will learn this in the mentorship content as well. But with pyramiding, one of the reasons why I'm able to build in, I mean, obviously it's my lowest size, so I could really add another 5 micros and build it up to a full 10 or even 15 micros if I wanted to. But one of the reasons why I'm adding two here is because I'm able to reduce the risk, right? So the risk was initially below this fair value gap here from my entry here. But now I'm able to reduce the risks as the market's running in my direction. It's creating new PD arrays, right? New order flows being created as it's running higher. So what I'm able to do is reduce my risk logically. And then when I trim risk, I can add on new contracts. Because what you don't want is to have more risk than you initially opened up the position with and pyramid your position recklessly, right? So you want to be able to pyramid and be able to reduce risk at the same time. That's why pyramiding is a little more advanced. You got to be really mindful of your risk because it's really easy to blow your head off, for the lack of a better word. Pyramiding. If you don't know what you're doing and you pyramid big positions, it can blow up on you real quick if you don't know what you're doing. So I'm gonna start layering my limit orders here in a premium. Why is that a premium? Because this is where the price run's starting. This is where I think we're gonna go. Anything below this is the discount. Anything above it's in premium. That's why I'm going long here, and I can buy again here because we're still in a discount of the implied dealing range. So you guys will get that in the month 4 content. So I can still confidently long, trusting it's a discount as long as we're below this equilibrium price point. But once we get above equilibrium, I want to start covering and profit taking on the expansion run higher. All right, so 1050, 1110 macro. All right, so I want to see us start reaching into these limit orders during this time here. Doesn't need to reach all of them, but it needs to start making ground to those levels. So if you take a long and get stopped out, don't abandon the bullish bias. I'm not saying you can't take that feedback and then go short and still profit off a little bit of a run, but don't say, okay, stop me out of my long. Screw it. I'm going to go short because then you're going to go short here and then it's going to be the real move that you're actually expecting, but you didn't stick with your conviction. So it's very important to, yes, still be flexible in your bias, right? Like if it just kept dropping and showed nothing bullish like this here, then there's nothing for me to go long on, right? There's nothing to do unless I would reverse it and go short. But it's very important not to reverse your bias and just totally throw it to the wayside because the market stopped you out. Because many times what it's doing is it's just going to do one more pass lower. So wait for the next break in market structure, fair value gap, and take it long to the upside. And do it with half the risk that you got stopped out on initially. And you'll never blow your account. All right, so like how we're seeing some speed through that 67 level. Need to snap up into some of those limit orders now. Let me see. Yeah, I want this one here at the 79. Give me that midnight opening price there. A little partial there at the midnight opening. And then we'll take another partial here at the fair value gap. All right, so first partial will be there at that. That's the midnight opening price. Let me go to, and then the next one's going to be inside that fair value gap here. Right. So the market running into the limit orders at the time, right? Want to see it do it, macro window. All right, so now we're watching this fair value gap here. Yeah, I think we're going to go ahead and do it. Yeah, let's go ahead and just move this up here. All right, so I'm locking in the gains here. So regardless, that'll mitigate that first little loss I had. But still, again, well up on the day from the first trade. Taking partials, like I say, partials always pay. Reason why I moved the stop here, just so you guys can follow the logic. When you're trailing the stop, I teach all this as well throughout the video, so you guys will get all this information, but you don't want to rush the stop loss. You want to be very patient, especially if you're holding for bigger runs. And again, I'm not saying this is an insane run, but you know, when you're holding for so far 45 points, and then I'm looking to see if I can get 90 points. If I'm looking for a 90-point run, well, then I can't suffocate the stop loss on every single price fluctuation. You gotta let the trade breathe. So what I'm saying is the stop loss started here, but then as we consolidated and left that range, it has no business overtaking this consolidation range. So now the stop goes from here to here. And then when we displace away, we create what, a fair value gap here. So the stop can trail below the fair value gap here. Because I don't want to see it trade through this gap here, this fair value gap here, and then this one here we extended through. So that's what 3 PD arrays. So the stop is below that here, right? And then once we consolidate inversion fair value gap, we respect it. The body's proof it doesn't need to go lower anymore. Trades higher, drops down, consequent encroachment, respects it, trades higher. It doesn't need to come back down into that anymore. So I trail the stop up to here. Because we have what? This gap here I told you the market should turn from. Is the NASDAQ listening to me, guys? So fair value gap there, trades into that, and the fair value gap here with the down close candle. I would not want to see the market trade all the way through that and me still want to be in the trade. So that's why I'm locking in the profit as it's running higher. So I'm moving the stop as it's running in my favor, but I'm not just impulsively rushing it because I'm scared it's going to take something from me. You still want to move the stop loss with logic, especially as you grow into a trader that's holding for more points.